Hi, I'm Jen Heimbach here at Ephrata National Bank. Welcome to our second installment of Ask a Banker, where we answer your questions on banking terms and financial concepts. In this episode, we'll address the question, should I use savings or a line of credit to cover shortfalls in my income? It depends on a couple factors that we'll discuss here today to help you make the best possible decision for you. First and foremost, you'll want to evaluate your expenses to figure out what you can eliminate to lower your income shortfalls as much as possible. You've done a great job saving and have a rainy day emergency fund set aside. Although it probably won't feel great to see the money in that account going down, here are a couple things to think about that might make you feel better. The biggest thing being is that's why you have the account. So you should be proud of yourself to have the funds available to pull from instead of taking on new debt. Rates are low right now, so while your savings is not earning as much money, it is still working for you, just not as hard. And this situation is temporary, so you've already demonstrated you have the ability to save. Once things get back to normal, you should be able to do the same thing. If you do burn through what you have available in savings, you will always have your line of credit available as an option. You'll just want to make sure that you're able to support the new payment in addition to all your other monthly expenses. The main reason to borrow would be that you haven't accumulated enough in savings, so a credit card or a line of credit is your only option. Now, if you do have money saved and you're still on the fence on whether you'd like to borrow, here are a few things to keep in mind. As mentioned before, rates are really low right now, so the interest you'd be paying to the bank is much less than when rates are high, making this a really good time to borrow. Although credit card rates are historically low, it's important to keep in mind that they're relatively high when you compare them to a home equity line of credit. Minimum payments on lines of credit are relatively low compared to other monthly expenses like your rent or your mortgage. And by borrowing, you will not be pulling money from your savings, meaning you would have the funds available later to use if needed to cover your minimum monthly payment. The only downside would be that you will have new debt, so you'll want to make sure that you have that considered into your budget when your income does fully restore and that you'll be able to make that new additional payment as well. With everything we discussed today, there's a lot to consider when deciding to use savings or a line of credit when you have shortfalls in your income. Obviously, you want to make the best decision for you and what makes the most sense for your situation. If you found this post helpful, like, share, or leave a comment on what you would like to ask a banker. Please subscribe to our E&B YouTube channel so you don't miss out on our next installment. Thanks and have a great day.